And what if I told you that you can literally buy a house as a U.S. military veteran or active duty service member with a 500 credit score? You probably wouldn't believe me, but it's true. You can buy a house regardless of your credit score. This is not a gimmick. There are no loopholes that you're about to find out. There are no special exceptions or exemptions that you need to know about. The U.S. military veteran loan is by far the most superior mortgage product that exists on the planet. I said it in my last video, and I'm going to keep saying it until I'm blue in the face. The VA loan is not just the greatest mortgage product of all time just because it offers 0% down. It's not just the greatest mortgage product because there's no private mortgage insurance, which saves military veterans anywhere from $200 to $400 a month. It's not just the best mortgage product because it allows you to buy a 2 to 4 unit with no money down. It's not just the greatest mortgage product because of flexible credit guidelines and a laundry list of all the other benefits that come with the VA loan. It is the greatest mortgage product because it also allows you to buy a house regardless of your credit score. Conventional loan, FHA loan, and USDA loan have nothing on the VA loan. And in this video, I'm going to share with you the exact framework to how to get approved. So by the time you get done with this, if you watch the whole thing all the way through, many of you are going to be rushing back to apply for a loan that you probably got denied for in the past. Before we get too deep into the video, let me reintroduce myself. I'm Greg West. I'm a licensed loan officer. I've been doing this for 10 years. My NMLS ID is 1447959. And one of the shocking things that I've experienced as a loan officer for the last 10 years is that unfortunately the VA loan doesn't get talked about enough. Most loan officers don't understand how the program works. Unfortunately, most real estate agents don't either. And as a result, veterans are missing out. Veterans are also getting denied for loans that they should be getting approved for. But that's part of the reason why this channel exists, because I'm here to give you that information so that you can stop getting denied and get approved for your dream house. Now, I also want to share with you a very shocking statistic. More than half of the VA loans, and this is a real statistic, you can go look this up. More than half of the VA loans that get denied year in and year out are denied because of credit score. And the reason why more than half of these loans are getting denied because of credit score, I believe, is that large retail lenders like USAA, Navy Federal, and Veterans United is where most veterans go to get their loan, because they think that these three lenders I just mentioned are veteran friendly, and they're not. These lenders have what's called a lender overlay. So veterans are going to get a loan from them, not realizing that they require a 620 or better. So they're telling the veteran, after telling them no, like, hey, you got to have a 620 to get a VA loan, not realizing the VA loan doesn't have a minimum credit score. These are what's called strict lender overlays, or rules that are over and beyond what's written in the VA handbook. And unfortunately, veterans are going to these lenders, getting denied, and they're losing hope. And it's faster for these lenders. Like, the lender overlay makes it faster for these lenders to say no versus working with the veteran to get them approved. Before we move any further, I need y'all to do me a favor. Smash that like button, drop a note in the comments, and subscribe to this channel as well, because y'all know how YouTube works. If I get your participation and your help, the video can get put into the algorithm so more people can see it. And then as a result, I can help more military veterans just like you. You got to understand a critical truth. And that critical truth is this: the VA loan does not have a minimum credit score, and that is written in the VA handbook. I'll even put a note right here on the screen so that you can see that there's no minimum credit score. You can Google that, you can chat GPT, or whatever you got to do. The Department of Veteran Affairs does not set a threshold for credit score. So if you got a 500, 525, 580, 550, 600, whatever the case may be, and you've been denied because of your score, I want you to know the VA wasn't denying you. The lender that you were dealing with denied you. VA loans are underwritten and approved based on risk, financial patterns, and the overall application quality when the underwriter sees your loan. That is how underwriting is said. If you're trying to buy a house in 2026 and use your VA benefits to do so, and your credit score is challenged, or maybe you've been denied in the past by one of the lenders I just mentioned before, like Veterans United or Navy Fed or whatever, the next 6 things I'm going to tell you will determine whether or not you can go ahead and execute on getting that house. By the time I get done explaining what I'm going to tell you, most of y'all will realize you actually do qualify for the loan. You were just applying for the loan with the wrong lender. And if you stay to the end, I'm going to give you a bonus. So don't be so quick to scroll past this video. This is the foundation of how all challenged credit score loans get approved with a VA loan. It's what's called the 12-month rule. When an underwriter gets your loan and they decide whether or not they want to give you this loan, if your credit score is not all that great, your loan is going to be underwritten manually. And that simply means the underwriter has to manually look at all the paperwork and look at your overall application quality to determine whether or not they believe you're a good fit to purchase the house that you're trying to purchase. That being said, they're not going to look at your credit score. They're going to look at your credit profile for the last 12 months. They want to make sure that you have not had any late payments, no new recent collections or charge-offs, or any derogatory accounts hit within the last 12 months. Obviously, if your credit scores are not that great, you're going to have some late payments on there. You're going to have some charge-offs and collections. But we want to make sure that we don't see anything recent in the last 12 months. Because the VA handbook says that if the veteran has reestablished credit over the last 12 months, then even if your credit scores are 500, you can still buy the house. And that's how I've been able to help veterans with 500, 550, 560, 580 credit scores get approved for a loan, even though their scores are not that great, that the last 12 months of their credit history was acceptable because it wasn't anything on there. So the VA is going to underwrite your loan based on current responsibility, not your entire credit history. The underwriter is going to look at something called extenuating circumstances. So if there is a late payment, or there is a couple of late payments or charge-offs or whatever within that 12-month period, if you, the active duty service member or military veteran, can prove that what the underwriter is seeing within a 12-month period happened as a result of an extenuating circumstance, and you can prove that the extenuating circumstances are in the past, you can clearly explain what happened, it's documentable, and you can provide support and documentation, the underwriter can look at it and say, you know what, I'm still going to approve this loan. Now, examples of extenuating circumstances include medical illness, medical injury, loss of a job, getting laid off, military separation, deployment. Obviously, you can't control that. So those are examples of financial hardships that are caused by extenuating circumstance. If you just simply weren't paying your bills, well, we can't help you with that. But if the late payments happen as a result of a true extenuating circumstance, then the underwriter, as long as you can explain it, you can document it and verify what actually happened to you, then the underwriter will consider approving your loan. And believe it or not, I've had a ton of loan files that have come through the underwriting process, been in this exact situation, and we were able to document what happened to this military veteran, and we were able to get that loan closed and funded out of underwriting. Now, number 3, you got to be able to prove that you have recovered and bounced back. If there have been extenuating circumstances in your life in the last 12 months that caused you to be late on a credit card payment or something that shows up on your credit report, such as a collection or charge-off, it's not enough to prove that there was an extenuating circumstance that caused it. You also have to show the underwriter that you have went through the extenuating circumstance, the hardship has come, but it has also left, meaning you have bounced back and you're stable again. You do that with showing recent on-time payments since the extenuating circumstances have took place, stable and verifiable employment, nothing new derogatory has popped up on your credit, and you need to be able to show that you have improved or controlled debt. If you can do that, then you're going to tie that together with the extenuating circumstance, because the underwriter needs to know that the hardship, you're not still in the hardship that you claim that you went through. You need to be able to show that, hey, I went through the hardship, but I got through it. I bounced back. I paid my bills down. I paid my credit card off. I closed that account. I put myself on auto pay. I got a job again. I'm stable again. I saved up $5,000 to $10,000, whatever the case may be. You got to be able to prove that you have actually bounced back. 4, and this is probably going to be the most important thing I tell you in this entire video. If you understand this, this is going to help you get approved out of the underwriting process with the VA if your credit scores are not there. Compensating factors. Now, compensating factors are simply strengths in your overall mortgage application profile that help offset risk based on the fact that your credit scores are not there. So in simple terms, yeah, my credit score is not there, but I can show proof or evidence that I can still manage this mortgage payment responsibly. That is what compensating factors is. Now, compensating factors can include stable long-term employment. Like if you've been on your job for maybe at least a year and a half, 2 years, that's a compensating factor because you're showing the underwriter, hey, my credit scores might not be there, but I can stay on the job longer than 3 to 6 months. VA disability income. We know that you're going to get that income for the rest of your life. We know it's stable. We know it hit every month on the 1st or the 3rd. So that helps the underwriter to determine, okay, this person gets money every single month. So they got money coming in, they can make a mortgage payment. Low debt ratio. Like if you got good income, like you got disability income, you got a W-2 job to go with it, your wife got a job or your husband got a job or whatever the case may be, like you got enough money to make that payment because you got low debt ratio. That's going to help you get approved. Having cash on hand. Now, I'm not talking about literal cash under the bed. I'm talking about cash in a savings account or a checking account or a stock account or mutual funds or something like, or a retirement account, right? Being able to show the underwriter like, hey, I got 10 grand in the bank. I got 15 grand in the bank, or I got 15, 20,000 in my TSP account. That will help you to get approved in spite of your credit scores being low. This is probably the most powerful thing that I'm going to say in the whole video, because this is what allows you to get, this is really what allows you to get approved even if the credit scores are not there, because it allows the VA to see the whole picture, not just your score. And that's what makes the VA loan the greatest mortgage product of all time. Number 5, we almost at the end, is overall application quality. We talked about having clean credit history for 12 months. We talked about, if you don't have that clean credit, how extenuating circumstances can get you an exception approved. We talked about compensating factors, but overall application quality is what allows the underwriter to see the full picture, not just your score. And that's a good thing. That's a benefit. That's what makes the VA loan so flexible. And that's what makes the VA loan better than every other product. It is the superior loan product to every other mortgage product, because no other mortgage product is going to look at your full picture. Every other mortgage product is like, either you got what we need or you don't. But the VA is way more flexible, and that's good for the veteran and the service member. So you have to be able to present your case to the underwriter by giving them a full application, a narrative, clean bank statements, letters of explanation to help them see what happened in your life, consistent income, and everything else we talked about in this video. Underwriters approve loans they can understand, because clarity leads to confidence, and confidence allows you to get approved. So it's the overall picture. And that, again, that's the benefit. That's what makes this thing so great. So if your overall situation is strong, is solid, and you can prove to the underwriter that, hey, you know what? I had a situation in the past, but I can't afford this mortgage. As long as it's documentable and verifiable, the underwriter will approve your loan. This is the final piece, and this is probably going to be one of the most important pieces. This is the reason why VA loans get denied. If you don't have the right mortgage lender and the right real estate agent, none of what I've mentioned in this video is going to matter, because you got to work with the right lender to be able to execute this. Most mortgage lenders do not understand the VA loan. Even the mortgage companies that brand themselves as VA friendly and, veteran friendly and active duty service friendly, most of them don't understand the VA loan. Either the average real estate agent doesn't close one deal a month, and I guarantee you the one deal they close ain't a VA loan. So you got to make sure that you work with the right team. If it's your dream to own a home, if it's your dream to build wealth through real estate, if it's your dream to raise your family in a home, you got to remember something. You don't go as far as your dream, you go as far as your team. Not all lenders will allow you to buy a house with challenged credit. Not all loan officers truly understand the VA guidelines. Not all real estate agents know how to structure VA deals properly. Most loan denials are not actual denials. They come from just not working with the right people. They are execution failures. So the right team will change the outcome. That is why this content exists. That's why this channel exists, because my specialty, or at least one of my many specialties, is helping U.S. military veterans and service members with not the best credit own real estate and build wealth through real estate. So this is probably going to be the most important thing. If you get this right, you get everything else right. Now, I promised you that if you stay to the end of this video, I was going to give you a bonus. There's no way I could make a video about how to buy a house using your VA benefits with bad credit and not mention bankruptcy, because I know that the reason why some people don't have the best credit is because of a bankruptcy, whether that was a Chapter 13 or a Chapter 7. So with a VA loan, veterans can buy a house with a Chapter 13 bankruptcy as long as they have been in the Chapter 13 for at least 1 year. So we talk about that 12-month credit reestablishment rule, and have made on-time payments the entire year, and permission can be granted by the trustee that is overseeing the Chapter 13. So incredibly important that Chapter 13 bankruptcy is not the end and is not a death sentence. It is literally you just restructuring your finances, and the same thing for Chapter 7. So in certain cases with Chapter 7, most lenders are going to want 2 years from the date of discharge. But if there's an extenuating circumstance that can be documented, explained, like we talked about earlier in this video, there are some lenders that will take a Chapter 7 1 year out. Again, as long as you can explain the circumstances. Most lenders never explain this. Again, most loan officers don't understand half of the stuff I just mentioned to you in this video, but bankruptcy is not the end. Bankruptcy is just a restructuring of finances so that you can move in a different direction in your life. Listen, I appreciate you sticking through this entire video, listening to everything I had to say, and hopefully this video added value to you. If you're a veteran with challenged credit and you've been told no, in 2026, we're going to change that. This video is not about giving you false hope. It is me giving you the understanding of how the VA loan actually works so that you can get an approval. Your credit score does not determine whether or not you're eligible. It's honestly just the structure of your loan application, as we mentioned to you earlier in this video. If you want clarity on where you stand, I'm going to drop a link in the description. You can apply for a VA loan with me in Georgia, Texas, Florida, California, or Illinois. I will be adding more states soon. You can book a one-on-one strategy call to get me on the phone, and we can hash it out and talk some VA strategy. Or you can download my first-time homebuyer blueprint by tapping that same link as well. And last but not least, smash that like button, drop a note in the comments, let me know what state you're in, and hit that subscribe button as well. Peace.